in the previous video, we recorded all the general journals, the journal entries, and we record them in the general journal. And again, here are the summary of those items. We had, I believe we had all 12 of them. Now, the next step in this process then is to take these and post them to the ledger accounts. Now, in most computer programs, actually posting to the ledger account happens simultaneously with the recording of the journal entries. So I want to show you a little bit about the process. Let me lead into that a little bit. Lead into that process in that when we have a transaction, we do have a business transaction that happens. And when the business transaction happens, the first thing that happens is that we have a journal entry. And the journal entry is recorded in the general journal, which is a book that all journal entries go into. Immediately then, these are posted to the general ledger. And the general ledger is basically the ledger for each one of the accounts. Sometimes we'll call these T accounts. And what that is, it's a summary of each account and its total. So we'll have a ledger account for cash. We'll have a ledger account for accounts receivable, all the way through. So we have all the accounts in the ledger account. From there, we take the accounts out of ledger account and we take up the totals and we create an unadjusted, let me get this, an unadjusted trial balance, which is the first step in our year-end closing. So we'll create an unadjusted trial balance. Then we'll do adjusting journal entries and record any accruals that we may have or need to make. One thing to note is adjusting journal entries never involve cash. We'll then create an adjusted trial balance. From there, we create the financial statements. We then create a closing entry. And then we have our post-closing trial balance. And the post-closing trial balance is then the trial balance we use as the start of for the next period. So we've basically done these two processes. We've looked at some business transactions and made some journal entries. We are now going to post these to the T accounts of the general ledger, and in subsequent videos we will complete this process. And this is the stuff that will be on the first exam. All right, so I cheated here a little bit. I went back and looked at all the journal entries, and I pulled out all the different account names that were in the journal entries, and I created these T accounts already on a page. So so it went a little quicker, and it was a little more organized. So the first journal entry, and I'm just going to talk through these because we can't show them on two screens. The first journal entry, if you remember, is that the cash was given to the company, or the cash was contributed to the company in exchange for common stock. And one of the conventions you can see here I'm using is that each journal entry or each record in the ledger is given a reference to the journal entry it came from. So you can trace back and forth if you ever have a question. And always make sure that your debits always equal your credits, and so everything will remain in balance. The second journal entry was the BTab got some cash, and it was a loan from Lincoln's grandmother. The third journal entry was a purchase of a van, some equipment for cash. So we debited the van, we debited the equipment, and we credited cash. There was a purchase of supplies, which is a debit, journal entry number 4, for $500. And that purchase was made on account, so they have not yet paid for it. So we're going to credit accounts payable. We then bought some insurance for the next 12 months. The company, that's journal entry number 5, they paid $1,800 for this 12-month insurance policy. So we're going to credit cash and we're going to debit prepaid insurance. Number 6, they did some work for some folks. They received $1,600 in cash. Let me erase that dollar sign there. They received $1,600 in cash for the work they did. They have $400 of receivables, which they have not yet been paid, and we're going to record the entire amount, both the cash and the receivable, as revenue during the period. We pay off part of the accounts. We pay the accounts payable that we owe for the supplies we purchased in journal entry number 7. And you can see now that the account balance, the account payable balance, is 0. In journal entry number 8, we paid it. I forgot to record. I recorded the debit, but I didn't record the credit. And that was the cash I paid, number 7. Apologize for that. Number 8, we received $400 of the amount we were owed for the accounts receivable. So I'm going to debit cash and credit the accounts receivable account. And now my accounts receivable account has a balance of 0. I received $9,000 for those services I have to provide for the next 6 months, and I'm going to record that going to debit cash, and I'm going to record the other side. I'm going to credit unearned revenue for $9,000. I did some work at year end, before year end. Journal entry number 10. I received $9,000 in cash for that work. I have $1,000 of receivables for that work, and the two together record the cash and the receivable I have is $10,000, and I'm going to record that as revenue. I record in journal entry number 12, or excuse me, in number 11, I have an operating expense of $4,000. I paid $3,300 of that. So I debited operating expenses for $4,000. I credited my cash for $3,300, and I still owe $700 on that. So I'm going to credit accounts payable for the other $700. And the last piece here is I have. I knew that counted my supplies inventory, if you remember, and I had $80 left. So to get that to balance, I must have credited supplies inventory for $420, and I'm going to debit supplies expense for $420. Okay, so the final process here is I will total all these accounts up. So in cash, I have $44,400. I'm going to double underline all these totals. $1,000 in accounts receivable, $80 in supplies inventory, $1,800 into prepaid insurance, $20,000 in equipment, a $50,000 van, $700 in accounts payable, $9,000 in unearned revenue, a $60,000 loan, $40,000 in common stock, $12,000 total in revenues, $4,000 of operating expenses, and $420 in supplies expense. And this completes my posting of the journal entries to the ledger accounts.